Hey, good morning, guys. This is Simon with Trade and Perform Coaching, doing the market preview and trade review actually for 11:12. I think I left 11:11 in there. I will edit that. And actually, let's go and jump into today. So, first of all, let's look at what we were dealing with yesterday coming into the day. If you look at the profile, this is yesterday's profile. So, coming in on the day, we were trading inside of the gap from the 10th, which was the 13th Monday, right? So we're dealing from Monday's gap. And we're essentially inside the day, the top of the range from Thursday the 6th, which was that trend down day, right? So we've pretty much come and recovered all of this rotation lower that we had from Thursday and Friday, and we covered all the way back up, and we've exhausted just over Thursday's high. Okay, so two things to remember when you're looking at this, and that is if you want to look at the profile, right? This area right here, this area right here, right? And then today, this area right here, that is the most easily tradable area that's most easily traded through without any resistance. Okay, so it's important to remember that if you're going to try to contra a trade and you're inside the prior day's fair value, this is the most important thing for me for profile as far as I'm concerned, right? The most important thing is you try not to contra for anything other than a scalp. And even then it's difficult inside these blue areas from the prior day. It's super easy to mark it off. Just take your chart, mark the high, right? Mark the low. And if you look yesterday, if you look between 25,558 and 25,686, right? So if I go to my regular chart, we'll use this one that has the least amount of lines on it. Let's just duplicate this. Here we'll use the 60 tick. There we go. So this is, let's erase all the lines. And I still have a ton of lines on there. Hold on one sec. So I think I said 25,558. It's roughly here. So this is for yesterday, and I think it was 668. It was roughly 100 points. Let's look. 558 to 686. This is to 686. Okay, so if you look at the two yellow lines, right, I'm gonna make it big. Now look inside of there. And what you will see as you look at that chart, so this is for Wednesday, right? If you looked underneath, that's this area right in here, right? This is underneath. You found responsive buyers. If you try to counter anywhere, so you can see by the time we got to 8:30, we're already inside the range. You can see we rolled all the way through. And your best place if you're going to contra for a bigger swing is always below that value area low. And then what are you shooting for? You're trying to get it to shoot to the other side of the range. And you can see, so I'm trying to think of how to explain this. The part that's important here is that when you are down here, you don't know the route that it's going to follow back to the upside, right? So what you are trying to accomplish is get down here and get up here. Sometimes it does it in our time frame, sometimes it doesn't. But even without that, if you got long down here, right, your target still would have been towards that 686, which meant you had a substantial amount of counter rotation back up that was available. If you were short, right, let's say you shorted within here. Say you shorted up here prior, right? This was prior to the, or right on the US Open. What you're targeting is the other side of that fair value, which means you could have shorted right up here at 830, hypothetically, from 805 and targeted to 555, and you would have actually hit it, right? And then you know that you're going to start getting responsive buyers and counter rotations down here underneath the fair value area. That's all there is to teach from that, right? And the other thing you want to believe is if you look at this, and this is a very large time frame chart, see how throughout this whole area, if I highlight that, see how we keep sweeping that area? This is a very poor place to try to contra trade either direction, right? Above is good, below is good, but just going, well, it's going to go lower, or well, it's going to go higher in here is a very big challenge because there's not very many people defending one side or the other, right? They're defending above, they're defending on the top side, and they're defending on the bottom side. And then the other thing that you see from this chart that's pretty clear is that we need to break and hold below 25,500 in order to go lower. So if you look at this morning and you go, oh, it's going to go lower, the first thing that I would look at this morning is I go, I need an impulse move underneath 2,500 in order to, and then what I'd like is a break below 2,500, a push back up to 2,500, reject, and then push lower, right, to come and re-auction all this poorly auctioned area off to the left. That's the two things that are going on. That's the big picture of what's going on in the market right now. Okay, point number two, this is important. How do we trade it? Okay, so let's go through the fundamentals and then we'll go look at see what's set up, right? So the main chart I trade off of is this chart right over here along with my algorithms, right? So the first condition that I'm looking for is in order to go long, right? So I'm a scalper primarily, okay? So the first thing that I am looking for when I get in here is I want to look short when I'm underneath. So the gold channel is the 200, the blue channel is the 100 period moving average, and the purple's the 400 period moving average, which is more of a stable guideline which side we're on. Okay, so when I get to the open was pretty easy for us, whether you're manually trading or you're using the TMP Trader Assist. Okay, we opened up and we were already trading below the 200, the 100, the 200, the 100, and already below the 400 period moving average. You can see right there. So that makes the first decision pretty easy. No longs, right? I don't care how far it bounces back up off the bottom. I'm not contra trading, and this is the reason why. Because when I'm coach people, they take losses all the way down through here, trying to find the reversal. And by the time they actually get the hook on the reversal, they're so buried that most people never ever take the reversal to begin with. Okay, so that's point number one. Point number two, what are we looking for? Since we're underneath the 100 and we're underneath the 200 and underneath the 400 in this case, I'm looking for my white bars down, right? So I don't trade till after 9 o'clock. I am over here. This is where I start trading, is starting right here, basically. Okay. The reason for that is I don't like the volatility in the first half hour. And psychologically, that thing moves so fast that I get flustered if I get stopped. So I do on occasion trade in the first half hour, but I also have to accept that if I trade in that first half hour, I run the risk of just getting run over. I don't like it. I suggest you don't, is my suggestion. Okay, so here's how my sequence of trades went. I didn't get this, right? Clearly was a good short. I didn't get it. There's another short right here that's being covered over that turned into a stop, and I didn't take that stop either. Here's my first trade right over. Actually, you know what? I can't swear that I didn't take this. It depends if it came after 9:02 or not. I don't think it did. But if it did, I have a trader assist and it would have taken it automatically. But manually, I didn't take it. Okay. Now, here's a place where it gets into a gray area. We are over the 100, but under the 200 and under the 400. I think it's all right to take this trade. Your odds are lower that it'll work. So for most people in the room, that's a pass. For more advanced traders, that's fine. And if you took that and you left your stop in place properly, you got your extension to the downside. So what I'm going to have to do is pause this and pick back up in a couple minutes because I have to take my daughters to school, and I forgot about that. So